Let's talk about one piece that we've been talking about for many, many years now, the investment piece. Yes. Traditionally, we had endowment plans, the money back kinds, which is what connected with consumers, that, I get something back. Then came the ULIP story. Started off well, but then there were concerns about very high charges, especially in the first year, all front-loaded. People didn't know that these charges exist, lock-in, and etc., etc., etc. But in the last few years, we've seen some very heavy regulatory intervention. And some of the products that we now see seem to be extremely low on cost. Would you say ULIPs have completely transformed from the time you probably launched your first one?
Oh yes, ULIPs have completely transformed. So when the regulator intervened in 2010 in a very big way, I think there was a huge step which they took, and the huge step which they took was that I will control what you can charge the customer. Now you in turn, Mr. Insurance Company or Mrs. Insurance Company, want to go and spend 5 times the money in acquiring that customer, your problem. Let your shareholders write the check. But the customer can be charged only that amount. Yes, so it had some clear features in it, which was there is a 5-year lock-in. The exit costs were made very, very low. The entry costs would also kind of became quite low. And as a period of time, as the companies gained scale, so initially when post 2010 when the products were launched, firstly a lot of people ran away from that product because they couldn't afford to be selling that product at the kind of cost structures they had. But gradually over a period of time, as companies like us gained scale, you very rightly, as you pointed out, we are not charging what is the maximum allowed to us by the regulator. The charges have come down, and when you compare now today a life insurance to a mutual fund product, it is extremely competitive. As long as you have a slightly longer term horizon, because in an insurance product you are locked in for a period of 5 years. In mutual fund you can get out whenever you want. Now frankly, if you go and analyze the mutual fund portfolios, I read a report which said that 1/3 of the retail portfolios in mutual funds are actually not even there for more than a year. So people are actually investing in and getting out within a period of 1 year.
Churning it.
So they're churning it. So maybe that's a product for them. But there is, in your overall financial goals or a financial asset, there has to be a portion of money for investment purposes or savings purposes, which you want to keep away for at least 5 years. Now, the moment if you have that money you want to keep away for 5 years, today I would say ULIP products are even more competitive than that of mutual funds on the equity side. Another advantage people forget in case of insurance product versus a mutual fund product is, mutual fund, when you switch, you're almost like buying a new product. In case of insurance, invariably these ULIP products have 8 or 9 funds within them, including debt, equity. You can switch as many times as you want. The cost of switching is very low. You can redirect your premium. So there are a lot of options available. So you continue to get the tax benefit. You remain in the same product, and the charges on that particular product are much lower than over a longer term horizon than what you would see in a mutual fund. Over and above that, when you look at the performance of, say, a typical insurance fund or a mutual fund, the differences are not that much. They're pretty similar. I mean, you can always find a mutual fund which has performed better. I'm sure you can find an insurance fund which can perform better. But if you have a long-term horizon and you're willing to keep your money invested for a period of 5 years and beyond, today ULIP products are more competitive. At least some of the real products which are out there are much more competitive than that of what you'll find in a mutual fund. And I think it puts pressure on mutual funds also to continue to price themselves well. And I'm sure it will, like a feedback mechanism, put pressure on the insurance industries to again reprice the products and bring the prices down. And it helps the customer overall because your price of buying into equity or debt markets is reducing over a period of time, which is great for the customer. So, yes.
So it used to always be said, and I'm probably sure it's true even today, that insurance is never bought, it's sold. Am I right? So how have you then changed the dynamic? Because if a large part of your charges were actually going in commissions to acquire customers, would you say the game changer has been digital, online? Because otherwise, how do you incentivize the same person who you were incentivizing in a certain way 5 years ago or 10 years ago to now say, look, I can't give you this much, but you still got to go and sell my product. So how's the industry manage this?
So it's a journey. First is that there is still a very large part of the population which needs to be touched. We need to have face-to-face discussions with them and convince them that there is a need to have a part of your financial assets in products like this. So I don't think for an insurance company to survive in the long term, you can do away with a distribution or distribution channels or a distribution system which allows you to touch the customer on a face-to-face basis a couple of times. Because there are enough customers out there who need to be educated, who like a face-to-face discussion and want to be convinced, etc. But yes, gradually, slowly, as the products are dumbed down and they become more and more commoditized, or the offerings are well understood, like, for example, in case of mutual funds now, even though, as you were rightly telling me, people have invested in too many mutual funds, and I think they don't understand what that mutual fund does, but assuming, just taking it out for a minute, as the products get dumbed down, yes, more and more people will come online, and more people will either buy, since Policy Bazaar is working with you, people like Policy Bazaar, or come directly to our websites because they trust the brand and they might be buying directly from us because they believe that yes, it's a great company offering the right product and I want to be invested with them. So that trend of buying more online will increase. Now, when will it take off, as I said to you? I don't know, but people are getting more and more comfortable. So first is, people were told that ULIP products are not good and they're being missold. Now, gradually, I think a lot of people are understanding, no, there is a set of ULIP products which are great actually. And the size of the population which understands this will gradually increase. Now, as they keep talking to each other and as the notion around ULIP changes, that it is as good or even better than a mutual fund product, as long as you have a long-term horizon, I think more and more people will come online because the product is well understood. There are almost no charges to the product. So you don't have to be worried. You know what I'm going to be charged. Don't worry about what is happening in the background. My charges are almost lesser than the mutual fund. I know I'm locked in for a period of 5 years. Yes, if I'm a savvy investor, I have the right to switch if I want. And if I'm locked in for 5 years, I'll hopefully, if the markets do well, I'll get a good return. And that's what you have to be worried about. And by the way, it comes with a term cover also attached to it. And my maturity proceeds are all tax-free. So as long as that is understood, I think people can very easily go online and start buying these products, which is, I think it's only a matter of time before that happens.
My final question, Amitabh, many people think buying insurance is a jhamela. I'll be asked for medical checks, I'll have to go contact an agent, find the right agent, there'll be paperwork. Again, you were one of the first who went online and said that, look, if you go digital, we'll make the experience very easy for you, a good experience for you. How different is it? Both in terms of ease, speed, complications, cost, if I were to choose to buy my policy online?
So let's start with the first one. If you go and buy a policy online, the costs are lower. And actually, regulator has played an important role here because they said that since there is no intermediary involved, why are you not pricing it lower than what you normally are pricing for your other distribution channels? So the prices are lower, point number one. For example, we have launched a combination product with Apollo Munich. The prices of that product are even lower than what our online product are. If you buy both of them together, there's a 5% discount. So that's the first part. Secondly, yes, all of us have worked very, very hard to make the process as seamless and as quick as possible. We don't want the customers to be going through a medical if the medical is not required. So for up to a certain amount, most of the companies have what they call limited underwriting or no underwriting. In some cases, nothing is required. In some cases, you have to answer some basic questions and no medical is required. And now some cases we do a telephonic kind of, medical. And yes, in some cases, we'll even send the person to the home to get your medical done. But in some cases, it's a complicated case, especially if you're older. For people like us, I think you have to go through a medical. And that can't be avoided because you're looking for maybe for a slightly large cover and we cannot take the risk. But the whole purpose of this is to understand that we're trying to make life simpler. Please understand, since we were the first ones to the space, we also saw a huge amount of fraud. And obviously that made us a bit wary about making it so easy that it becomes even a green channel for the fraudsters. Please understand that for a product like this, if you invest a small amount of money, you can get the best investment return possible in the shortest period of time. You pay 10,000 rupees and can get a 1 crore cover. I mean, how great an investment can be. So on one side we want to make it easy for the right kind of customers. On the other side we want to make it very tough for the fraudsters. So, over a period of time, we've also brought in a lot of algorithmic kind of analysis which we have done and ensured that we are picking out the potential fraudsters who could be misusing this whole seamless process that you have created to go and buy a product online and then, say someone has died and claim the money. So yes, online is more seamless, it's faster, it's cheaper, and I think this trend will continue because from our perspective, the more people they come online, cheaper it is for us. And obviously we are attracting a very different set of customer because if they're coming online, I don't have to sell to them. Voluntarily they're coming online. It's a great customer to have because the customer is feeling the need for a term cover. And invariably, these customers stay around longer, so the persistency is better. The quality of the lives of, because people are doing it because they're doing a long-term planning, the quality of life is better because they care about their life. So from every which perspective, if the right customer is coming online, it's good for the insurance industry. So we'll do whatever it takes to do that.
It's been a pleasure talking
Thank
to you.
you.
Thank you very much
Thank you
for joining me.